Yeah, Aditya, can you make this full screen?
Hi, Sanjay. Good morning and welcome. We'll just get started in a couple of minutes. Are you able to see the PPT? Hello. One second. Better now?
Yep, this is far better.
Okay, let me see, figure out the audio part.
Yours is muted, so I can't hear you.
No, I just muted it because I'm calling you. 1 second. Hi, Sanjay. Can you hear me now?
Now I can hear you.
Yeah. Perfect. Perfect.
Yeah.
So we'll just wait for a couple of minutes before we get started.
Sure.
Audience is still joining in.
Let me know.
All right, Sanjay, so we'll get started. Are you ready? I'll quickly introduce you.
Yeah, sure.
I'm audible, right? Yeah. Okay. Super. So, thank you so much, Sanjay, for joining in. And audience, good morning and welcome to the Startup Investment Innovation segment of IPI 22. For the information of Sanjay and some of the attendees who are joining for the first time today, quickly let me set up the context of this entire initiative. So, the Investment Products Innovation Showcase we conceptualized as a part of our Azadi Ka Amrit Mahotsav. Idea was to create a platform, hopefully an annual platform, that will showcase some of the most innovative investment strategies and products that are available in the market. This we thought is very, very important for two segments. One being the wealth managers and distributors of products who are increasingly looking at unconventional and new investment products, but the legit ones to offer to the clients. And the second segment being the investor himself. The Indian investor, as we all know, is increasingly getting experimental with his choices and with so many new asset classes coming up. But he definitely needs guidance. We all know financial literacy is very poor in India. And that's why a platform like this becomes important for investors to separate the right opportunities from the wrong ones and get right guidance and handholding from some of industry's top thought leaders on one platform. So Sanjay, this is our first edition of Investment Showcase. We've divided this entire thing on 10 days. Each day we are focusing on a separate asset class. Today being the segment on startup investments. Thank you so much for taking the time and effort to conduct this masterclass for our audience. So audience, we all know startup investments, don't really need to talk much on that. We know the kind of clear frenzy that has been there on the investing side in startups over the last few years. But what we don't really know is for every one startup that shines, there are 99 who fail and end up destroying wealth or the hard-earned money of investors. So in this, amidst so much of clutter, when thousands of startups are getting floated, thousands of ideas are getting floated, and people from all across all ages, regions, and backgrounds coming up with startup ideas, how do you actually pick up or bag the right ones? Now, Sanjay is one person. I personally have seen him over the last almost 7-8 years, and I'm sure the rest of the industry also concurs with me. He is one of the most prolific startup investors in India. He has set up 100x VC recently. Before that, he was investor in almost 150 plus global startups. Through 100x VC, he has invested in almost 70 odd startups till date. Some of the large names that he's invested in are CoinDCX and Axiom Spaces, and there are already 4 unicorns in his portfolio. He's a TIE board member and a 2019, and then he founded 100x VC in 2019, which is a SEBI registered fund sponsored by Mehta Venture Family Offices. 100x goal is to invest first check in 100 seed stage India domiciled startups every year. That's huge from any sense of imagination. He has an outstanding portfolio performance with 103% IRR on all funded startups to date versus the industry average of 30%. His last exit in 2020 as a lead investor was Loginext, where Sanjay created a deal syndicate which generated multiples of 16x returns for all the angel investors included in the deal. There's a long list of accomplishments and feathers in his cap, but I'm going to cut short that so that we can quickly move to Sanjay. But Sanjay is an engineer and has done executive education from ISB Hyderabad and venture capital from Wharton. He was honored with the TIE Hall of Fame in Jan 2020 for his outstanding contribution to angel investing. He's also been honored by being awarded Angel Investor of the Year by Let's Venture and has made to the Forbes list of investors and named as a super angel and one of the top Twitter voices by Entrepreneurs magazine. So on that note, I will quickly invite Sanjay to take over and take us through this exciting presentation on his ideas of how to go about picking winners. So Sanjay, again, thank you for joining in on Saturday morning. Over to you. So as I informed you, the audience has joined in through a separate event platform, and I'll be happy to moderate Q&A if we have time towards the end. So the session is till 11. You can plan it accordingly. I'm very much here to help you with the PPT and the Q&A. Over to you.
Thank you, Aditya. Thanks for inviting, and happy to share whatever I've learned across in last now 12 years of investing in startups. What I will be showcasing in next 45 minutes is all going to be, culmination of my experience of investing personally in over 150 plus companies and now over 100 companies in 100x.vc as a fund. So this gamut of deal making or the transactions helped me get some finer points about do's and don'ts in venture investing. And can we pick winners is one of the questions typically is being asked across. How do you pick winners? You've got 4 unicorns in your portfolio. How did you arrive at picking those winners. Uh, Straight, no, you can't pick winners. Very difficult to know which one is going to win. If I knew Oyo would be Oyo, I will put all my money over there. So did I know Oyo will become Oyo, and or CoinDCX will become the way it is now, a $2 billion company? No, I didn't knew, when I was investing into it. But yes, there is a process, there is a way to invest in startups, and there is a standardization which you can bring in your investment thesis, and I'll run you through that. But I mean, it would be great fun if there is interaction, if there are questions, and if you guys, want some clarifications on way to go about investing in startups. Happy to share my notes. So keep pouring in your questions, and Aditya will help popping up the questions, and I would be happy to answer that. Aditya, can you move to next slide? So that's Team 100X. We believe we are in people business. And startup investing is all about people, right? You engage with founders, you engage with entrepreneurs, work with them very closely, and we believe, cracking uh, the code of relationship with entrepreneurs is key to your success as an investor. And all of us are very conscious about it. Our primary aim is to do the value addition as a team to all the entrepreneurs, to all the founders who are taking that risk, and building their career, betting their whole career on building an idea into a business. And we as a team help these entrepreneurs move forward, accelerate their goals in such a way that they reach their goals faster, quicker. So it's all about capital plus education. So what we work across with every startup founder or idea in our portfolio is to give lots and lots of value addition beyond capital, because capital can help you move to one level, but if the direction is not there, then it's tough. So the point what I'm making here is, many of the investors think across startup investing as just a capital game, saying that let's pour in capital and things will happen by itself. No, it doesn't. You need to really work with the founders, spend time with them, build the company, build the business, and build India. That's how I would say across. Next. Uh, Most of the venture fund investors, as I mentioned in picking winners, no, I mean, today also, if you tell me, can I see the future? No, I can't. Most of us are trying to predict the future, and that doesn't make us a successful investor. So picking winners is a myth. And, we have two classes of investors, which I always say, those who don't know, and there are another class which say who don't know that they don't know. And if you are in the second one, you are much better off. Next. Startup world is hugely filled with randomness, right? There's no predictability. You are unable to you know crystallize, saying that or materialize and saying that this company is a short winner, and that's what it will happen across. No, it doesn't work that way. Improbable things happen all the time, like, and things which you believe, saying that these are short is likely to be failing, kind of stuff. And sometimes you believe, you should not have invested into this company, but those decisions really see great success, kind of stuff. So nothing is more common in startups, where you see investors who are right for the wrong reasons, and vice versa, right? So there's a lot of luck at play, but you need to have a process for that luck to work for you. Next. That's my luck at work. I have been very fortunate to get, as an investor, 4 unicorns, kind of stuff. Got my first big exit with Oyo with 280x kind of return, and have been very fortunate to work with some of the great entrepreneurs, in India and outside India both. And I've been at it since last 12 years, investing in startups. So have seen, so typically right now, look at around, anywhere around 600 to 1,000 deals a month. That's the kind of, deal flow which I see across at 100x.vc. And hence, know what are the questions to ask, how do you eliminate bad startups, typically. So that's where I think I'll share across what are the questions you should ask across various startup founders, and take it up. Next. And Aditya, if you are getting any questions in between, I'll be happy to take it. You can pause and we can get into Q&A if there are any questions.
Sure. So audience, there is, you will see 3 dots, but a tab for ask a question on the left footer of your screen. So please use that to put up questions during the session or after the session. I'll be happy to take up.
Sure. So the goal of any investor is to find and fund the next big thing, right? What's going to be the next lot of winners which are going to get created across? How do you part of that deals? The big thing which is going to change the world, impact the world. So how do you be part of that journey? That's our singular goal, right? So as an investor, we are entering at a valuation and exiting at a valuation. So idea is you are not investing as a, this business is not useful to you, or I don't understand this particular sector. Let's say, for example, Web3, blockchain. If you are not understanding, doesn't mean that you should not invest, right? Find people whom you can back across, find people who are experts in the space, get your, dip your toes into it, try to understand the basics and keep investing, right? So idea is to spread across your horizon and, find and fund the next big thing. Next. So, it's very difficult to predict that where we are going, and, we have no clue about how the future will pan out. But definitely, we know where we are, right? So if you are investing into any startups, follow a process, create an investment thesis. I have a template in the coming slides about how to build your investment thesis as a startup investor. Then start working with a lead investor. So find people who has got an experience and can invest in startups, or can pinpoint and discover the valuations, saying that this is a great startups which they are investing, and you are able to tag along with those lead investors. Get some validation, social proof with them. But while you are doing any of this, look at the transaction, legal fees to be paid, what kind of cost you are having, and avoid conflict deals. Now, what do you mean by that is, where there is some incentive kind of stuff. So for example, you will see a lot of investment bankers, right, who will push you deals. I mean, they're not investing into the deal. If this deal was supposed to make lots of money, they can always invest across, but they're not investing. But they're trying to tell you to invest, kind of. So just look at it. I'm not saying all investment banking guys are trying to sell, but that's their job, right? So idea is try to look at where, deals at early stage, very, very consciously kind of stuff. Every deal you invest across, you need to prepare an internal investment note, like what is the market size, what is the unfair advantage of that startup, what is their business model, how they will make money, what is the team strength, and what kind of exit opportunity it is providing, right? So, you can work on this investment note for every deal and keep referring whenever, a couple of years go by, saying that how your decisions were made kind of stuff. And these decisions can be made based on the current market sentiments, observations, right? And which does not require any guesswork of the future. This is more of trying to put a process for investing in startups. Next.
Next slide, Sanjay.
Yeah, please. Next. Yeah, so it's very essential to understand the difference between investing in good things and investing things well, right? Um, I mean, you get a Series C or D kind of. So there are various levels of investing. Like you do seed stage, early stage. You go across pre-Series A, Series A, as Series B. As the stage of the deal, improves, the chances of success is very high. But for investors, the valuations are very high. So your ability to make the multiples reduces as the stage grows across. So it may be it may be great deal, right? If you are investing, let's say, at Series C or D, but the chances of you making uh, returns then becomes very, very difficult, right? So there's a difference between investing good things and investing things well. In startups, entering at a very, very high valuations, if you are an individual investor, doesn't make sense. If you are a fund which has a thesis saying that you are going to invest in Series C fund and writing, let's say, 50 to 60, 50 to $100 million checks, then it's a different story. But if you are doing individual investing, entering at a high valuation and putting a small check of $10,000 to $50,000 doesn't make sense, kind of stuff. Let's not do spray and pray, kind of stuff, and follow a process of investing. Next. So in startup, I always say that risk is 1x and upside is unlimited. This is the only asset class where you can look at 1000x kind of returns in 5 years or 7 years kind of stuff, right? And the capital which you invest is very small and the upside is just unlimited. And you should be doing portfolio diversification, as I mentioned, across. Try to run through every vintage every year. We had seen in COVID times, edtech companies were really favorable. Fintech was favorable before that. It's favorable now also. Try to create across a portfolio with various sectors included into it, not just married to one, specific industry. Next. This is the portfolio investing strategy, which I'll leave to you. It's all about putting in lots of little bets. So let's say you want to do a allocation of 2 crore capital over 2 years, or maybe 3 or 4 years kind of stuff. So first you deploy 50% of the capital as a first check, which means 1 crore as a first check, and 50% you reserve check for follow-on. So 20 companies, first check, 5 lakhs first year, and then 5 companies as a follow-on round for 20 lakhs to keep your stake, right? So that's how you can do a simple allocation of, your capital, right? 2 crore rupees. So build and focus across at least creating a portfolio of, 20 odd companies, There are research paper which says that if you cross 20 portfolio companies, you will not lose capital. Your capital is preserved, and once you cross that, basis on your luck, your 2x, 3x, 5x, it just keeps on scaling up. How do you get access to deals, right? Is very, very important. That I'm ready to invest, but how do I get deals? So this is how the deal evaluation you should be having across. So let's say you promote yourself on social media and announce yourself as an investor, and you will get a lot of random people who will be sending out mails on LinkedIn, direct mails, and you may do find it deals you might be getting across to review. You end up doing 50 meetings and 5 investments. That's like a lot of hard work, full-time role to get into doing it. Then you get validated deals. These are like from angel networks, investment bankers, who are going to validate and work for you. So you join an angel network, get some access to 100 deals. You do 50 meetings and do 10 investments, right? So your chances of success becomes higher. Somebody else has done work for you. Then you got referred deals. These are like other lead investors who are now become your friends and who are leading or discovered a deal. They are putting their money and they will refer a deal to you, saying that, okay, this is a place where I'm putting money. I have discovered this deal. If you want to join the cap table, right? And they will bring you into their syndicates. So you do 50 deals, 50 meetings, and end up doing 20 investments. So the best way to source deals is to try and tag along with other investors who have either they are on the cap table or they've already put in money over there. Their skin is in the game, and that's why they are referring that deal to you. So that's how the portfolio investing strategy would work for you. Next. Uh, I have seen this is a red flag which I would like to position across. Yeah, I've seen across people losing money when somebody is marketing a deal or selling or peddling a deal, saying that this is a proprietary deal, right? किसी के पास ये deal नहीं है, ये आपको ही मिल रहा है, and this deal you should invest, kind of stuff. So I've seen people losing money on that. So as an experience, I would say that there are no proprietary deal. It's a myth, kind of stuff. If somebody is giving you this exceptional information saying that this deal is great, kind of stuff, you should invest, किसी के पास ये information नहीं है, nothing is happening in that state. Somebody is selling you a bad deal, kind of stuff, right? Look for their skin in the game. For conflict, it has to be there, kind of stuff. So just warning as a risk, there are no proprietary deals in startup world. Next. Portfolio performance. This is what I've seen across, right? And if I have to share across, just because आपका portfolio successful हुआ does not mean that it is going to give you a great returns, right? You may be right, but you are just getting some 2x or 5x kind of return. Those kind of returns are not very attractive in the startup world, because you lose out also quite a lot, right? And you know you have to be very, very conscious about how you are able to get the right valuations and invest into companies very early to get those multiples, right? So I've been a very, very proponent of startup investors, where at early stage angels, individual investors, family offices should invest at early stage rather than the late stage. Next. There's something which is called power law. If you understand power law, virtually you've understood how venture capital game works across. It's all about home runs, right? Not averages. You think across, saying that if this idea goes right, how big it can become across, right? And best venture fund follow a power law curve. What it means is, a very small percentage, right, of VC fund investment will give highest returns to the portfolio, right? So every investor typically will have couple of deals which are going to be returning them fund full fund value plus kind of stuff, right? And that's where these are called home runs and big outcomes, right? So this is a game of finding those outlier hits which are going to be there and not look at. So we have been trained as an investors to think across saying that अरे इसमें पैसा डालो पैसा डूबेगा नहीं, right? That's not how you think. In venture investing is all about saying that you start thinking saying that if this thing goes right, how big it will become, right? So it's a very different way of thinking kind of stuff. And that's where if you learn power law, I've written a blog on my LinkedIn. Time permits, please read that. If you want to know more, Google across on power law. On my LinkedIn, that blog gives you all the insights about various ways to look at how power law works across. Next. Happy to answer any questions if you have got till now. Otherwise, we will continue. Startup as an asset class, right? There are so many asset class to create investment returns, commodities, equities, real estate, right? This as an asset class is the only asset class as a startup is where you can influence outcome. Let's say, for example, you buy real estate or you buy across equities on the listed market, you can't influence their price outcome saying that, oh, price abhi double ho gaya. You can't do that. I mean, that's not the power anybody, individual investors would have across or capital to influence that kind of stuff. But in startups, if you work across with the founder, help them get connected, build their business, help them raise the next round of capital, that is where you can really influence an outcome. And that's why I love startup investing, right? Because this place you can work across with founders, create a value and create an exit kind of stuff. So that's where startup as an asset class, I believe, is while world over it is considered as a risky asset class, but in my perspective, this is the only asset class where you can work across with the founders and influence an outcome. Next. Now I will share across, what are the questions you need to ask entrepreneurs, seek answers, and how do you evaluate those answers, understand it. If you know how to ask all these questions, that's a good enough beginning which you can have across working with startup founders and become yourself as a venture capital investor. Next. The first question which you need to ask any of the founder is, what is the reason for your company's existence, right? What problem they are trying to solve? What's their value proposition? Ask them their elevator pitch, what's their ask. Many of the startup founder you will meet across, you ask them saying that, what are they doing? They will give you all about their product details, but then they don't know anything about how to raise funds, right? And you will not be able to invest into those companies. This is a tough journey as a startup. If the founders are not having a mission mindset or passionate about solving a problem, they will not be able to sustain or run that business for long, right? So you need to understand how passionate they are about solving some problem, and unless they are passionate about it, they can't hang in for long, because there are going to be tough times, weak moments. It's only passion driven founders which can make it big kind of stuff. Next. Imagine where you could be. Ask our founders, right? Get their imagination. Many of the founders who don't think big, doesn't make sense for you to invest unless there is a large market opportunity, right? The potential to build a big story. Their focus has to be there. Their positioning, segmentation, how they are going to win across within that market opportunity has to be there. let's assume there are market opportunities which is small today or even not existing, but tomorrow it will be big. Like for example, let's say driverless car, right? Say, autonomous driving car, like that's going to be the future. Now, today that market doesn't exist, but it's going to grow exponentially. That's why VCs are investing in that market. So the VCs invest for future, right? How big it can become across. So understand the imagination of the entrepreneur and try to see how they are going to focus and segment on the startups. Next. Why do people want this product more? Like why would people buy this product, right? Is this a painkiller? So there are three types of startup ideas. One is a painkiller, second one is what do you say, vitamins, and third one is candies, right? Painkiller is like need to have, chahiye hi chahiye. It fills the vacuum. It has got a non-linear growth. They go viral with velocity because it's solving a problem. Then comes vitamins. This requires across lot of capital to change the consumer behavior, right? And unless you have got capital like SoftBank or big VCs, it's very difficult to consistently invest capital on a momentum driven and change the consumer behavior. And lastly, candies. These are like more of a what do you say, the glamour products or the brands which takes around decades to build across, right? And a lot of like luxury brands which are there, these are like candies, very niche market, high priced, works for very limited set of people in the market. So you need to identify, is this idea, startup idea, a painkiller, vitamin, or candy, right? So think across and you will get your answers. Next. Why is the right time to build the startup, right? If you can understand that with the startup founder, it would be great, kind of. So ask them, why is this the right time to build the startup? And that will give you your answer about why should you invest the startup into that startup kind of stuff. So is there any economic impetus, which means, like for example, let's say EV market, right? EV market is booming. Investors are pouring in lots of money because right now there is economic impetus. Governments are giving subsidy. There's a lot of money which is getting poured across in the infrastructure of EV. So you know that's why you should look at it. There is a momentum, there is tailwind into EV market, or let's say enabling technology. Like for example, if let's say GPS would not have been there, right? If GPS as a technology would not have been existing, Swiggy would not have existed, Ola would not have existed, right? So enabling technology has to be very, very important, right? And if you see a new technology, you need to work across saying that what are the possible outcomes, and how that startup is leveraging that new technology and creating a innovation. Third one is timing wise, is cultural acceptance, right? Reprogramming of consumer behavior, right? See, in the COVID times, we saw across there was a cultural acceptance of learning online, right? That's why edtech companies flourished across. We saw mobile change the way people used to buy things, right? And e-commerce changed the way people shopped around. So there is a reprogramming of consumer behavior which happens across, and you need to constantly be aware about, focus on to that. And that's where the timing plays very, very crucial. I mean, let's assume, I mean, sharing my personal experience, when I was an entrepreneur, I had built a SaaS company in very early 2000, right? And that was ahead of time. It didn't work out because internet itself was not penetrative. So the infrastructure is also required for you to be successful as a startup entrepreneur. Next. Understand where you are now, which means asking them to share all the numbers. what are the metrics, what's the traction, MAU, which is monthly active user, daily active user, how much people are engaged with them, what's the capital they would need across to scale, what kind of team gaps they have. Like, for example, many times you got a great product guy who can build product, but have no clue about how to build a business or do a sale kind of stuff. So what are those competency gaps which team has? Next. Competition. This is very, very important for us to understand what's the landscape, who are the other people in that space, what's the unfair advantage, what's the moat, right? Why, how will they win, kind of, what's their barrier to entry for other people, what disruptions they have created so that nobody else can do across or get into market, right? Moat is going to be very, very important understanding. So ask them, why isn't everyone working on it, kind of stuff. Understand the competition. Next. Why will you do better than established incumbent? Somewhere somebody is solving some problem, right? And what's going to be your execution, rolling plan, business plan? How are you going to deliver the product? How your product or service will be consumed? What's your distribution, sales channel, right? How will you do better than the established players in the business? This is going to be the crux of all the numbers which you need to work upon on the execution side of it. Next. Lastly, you need to, this is the one takeaway slide, is to assess the hunger for investments and resource to grow. As a startup, when you are evaluating, right, if somebody is saying that, "Arey, मेरे को 2 crore दे दो, lifetime में पैसा raise नहीं करूँगा," right? The guy is building a living dead business, bootstrap business. You will not be able to scale it. Lot of people give me example of Zerodha or Zoho. These are very few exceptions, but look at the lot of the bigger ones, companies which has raised capital and continuously grown across. And remember one statement with which I started my presentation. I said, you enter as an investor, your job is to enter at a valuation and exit at a valuation, right? You are not owning the business, you are not running that business. So think yourself as an investor, and you need to assess if the founder is hungry to continuously raise capital. Unless they raise capital or consume capital, they will not build valuations, they will not create an exit for you. So this is very important to understand how big the founders can think about the idea, how big they can scale across. So your ability to assess that founder's hunger to consume capital and resources will be very, very important in that sense. So just think on those lines, kind of stuff. I'll take a pause here. And Aditya, if there are any questions, happy to take in. Let's run this.
Yeah. There are a few actually. I was just waiting for you to take a pause. One sec.
Meanwhile, folks, this presentation is available to Equalify, and Aditya will share with all of you. Please reach out to Aditya. So no need to take notes. Happy to share all these learnings with all of you.
Yeah. So Sanjay, the first question is, what's your due diligence process for making investments?
As I mentioned, I do seed stage or early stage investing, which means there's no data for me to assess, right? What I invest is based on hope. Hope is the assessment what I do across. As I mentioned all these questions before, this is what I ask across, and most of them do not have as much data for me to do a diligence on. Most of them are sharing projections or just about saying that how they will use the funds, what they are going to build across. Everything is on the future. So that's why most of my assessment goes on the hope, saying that can I see that future, what founder is seeing across? Can I understand and get educated on what founder is trying to tell me in 3 years, 5 years, 10 years down the line, this is how the world will look like, or this is how the founders are able to change the world or impact for better, right? Many of the founders pitch products, not businesses. So typically you end up helping them or pushing them, if you like that product kind of stuff, to convert into business, right? Uh, these are first time founders, don't know how to, pitch a business. They are great at pitching products. So for example, a startup would pitch across to me saying that I built 128-bit security. So for me, it's like, so what? To main kya karu? Kind of stuff. And then they will say, saying that, okay, this is difficult to break security. You can use it for credit card, swiping online kind of stuff and using for shop. Now, this is something which will make sense. So you try to deepen your understanding, make that product into business. So that's where your ability to help founders convert their product into business comes at play, and then you end up investing. So in one liner, there's not much to due diligence on data or numbers, because these are early stage, even the companies are not formed. But yes, you can do lots of diligence on the founder, market opportunity, their business models, and work on exit before you enter.
So next question is, how do you see as no, what's your what's your post investment role with the company where you're investing in?
Quite a lot. We work very closely with founders, and that's where it makes us as a value-added investor. We are all operators, which means we have run businesses, we have scaled businesses, we have exited businesses. So we understand in every aspect. Startup is a multi-variable stuff. Like for example, one of the basic things which we help founders is to help them hire a team, right? Initial team is going to be very, very important for founders. So we help them in the hiring style. We help them to build the business plan. We work on sell to sell, saying that how they will use the money, arrive at an optimal business plan. We help them with the introductions with VCs, investors, so that they are able to help themselves raise the next round of capital kind of stuff. Structure the business in such a way that it can consume lots of capital, as I mentioned across, right? And how do you use or deploy the capital in an efficient way? So in various aspects, right? Be it across in business, be it across in the capital side of it, use of funds, be it across on the manpower, we help them into every aspect. It's like they have got an free consultant on their side, unpaid consultant to access across.
There are a few more questions, but do you want to first finish off your thing?
No,
Because
let's take questions itself. You can share the slides with them.
Okay, we have another 10 minutes to go for the session. So I'll take the questions. Audience, you can keep putting in more questions if you wish to ask. Okay, I'm just looking at these questions. So typically, what is your decision-making process when it comes to investment process?
So there's one slide in this where this is how you as an investor should think across. Investor job is to make returns, right, on the capital investment. So you have to be greedy. You have to think about returns, right? Hence, you will have to start thinking in every aspect about saying that, think money. So for example, if a startup is, you are seeing a pitch and, it starts with value proposition, saying that what problem they are trying to solve, what market they are working across. You will think about saying that, is there money to be made, right? इसमें पैसा बनेगा या नहीं बनेगा, right? The first tick in your mind has to be, is there money to be made? इसमें पैसा बन सकता है या नहीं बन सकता है? Next comes across, the founder's background. They will talk about, their right to win, how they will, solve the problem. Do they have their expertise, right? So you assess the founder's capability. and integrity and founders way of engagement, their hunger for growth, as I mentioned, every aspect which is related. And then you think across saying that, are these people who can make me money, right? First is there money to be made? Then it is, are these people who will make me money? Thirdly, you talk about the metrics, your funding, parameters, your valuations, everything, and then you start thinking across how much money I can make, right? So three things: is there money to be made? Are these people who can make me money? How much money I can make? And that's how you build across the whole your investment thesis. It while you look at every aspect, what I mentioned in the numbers and everything kind of stuff, but you end up thinking across in these three buckets. Is there money to be made? Are these people who will make me money? How much money I can make? And then take an investment decision.
Sure. Next question is, do you also invest in competing brands or companies?
So within a portfolio, we will try to work across with one company, but we are not restricted. What we do is we engage with other companies in the portfolio and inform them, saying that if there is an overlap or a competition kind of stuff, be transparent about it. Our job is like a CA firm or a doctor, right? And we work individually on a deal to deal basis, not trying to share any information or from here to there kind of stuff. But so uh, if we are very bullish on a particular market, we end up doing multiple investments. But usually we would avoid across. As a first job, we would avoid. But if we are very bullish about it, we may end up doing two or three investment in the same space.
Sure. Next question is for an entrepreneur who's planning to raise money over the 6 to 12-month horizon. Do you have any suggestions for him to build his profile before starting the investment process?
One of the best way, if you got a lead time of 6 to 12 months before you raise capital, is to build relationship with the VC. Try to engage with them. Ask for advice. You end up getting money. That's how the mantra goes in the industry, right? So keep engaging with the VCs. Ask them for advice. Ask them how do you scale up, and you show them the execution, right? Give them updates regularly. Not asking money. While you are not asking money and giving updates, it's a big thing. What are the things you have closed, what are the things you have executed, how the business has grown. And I'm sure the VC would get excited if the idea is big enough kind of stuff. So one of the other ways to get near to any investor or VCs as an entrepreneur is talk to their portfolio companies, right? If a portfolio company founder recommends to the VC saying that this is a great company to look at, they would definitely get good attention from the VC fund, right? So there are multiple ways for engaging kind of as an entrepreneur. But this session is all about investors, so I'll just limit this here. We can have a separate session of raising capital and helping and thinking across as an entrepreneur.
Sure. From an investor point of view, the next question I think fits in better there. So this question is about how do you pick up the right platform to invest in startups, because there's so much of overglut of the startup accelerators, incubators, funds, networks, etc. So what's your advice on that?
I can recommend across a couple of places where I have invested and I have been through. One is Let's Venture is there, and just as I'm an investor in Let's Venture also, and they do great job in terms of pushing out deal, which is an online crowdfunding platform. Then you got Indian Angel Network. This is a place where I learned across my angel investing. So these are good platform to begin across, and they have good set of rules, ethics, kind of stuff, which you can engage across, get your angel investing done, or as I mentioned across, find lead investors, try to join a group, which is investing in startups, kind of follow syndicates. There are a lot of lead investors now whom you can follow across, be part of their syndicates. These are good places to engage. So, for example, let's say Anupam Mittal, right? Shadi.com founder, he runs a syndicate on Let's Venture. You can try to join that syndicate and invest in his deals. He's a great investor, good friend of mine. So you can start looking at this kind of options to begin with.
Sure. Then the next question is just looking for there are some irrelevant ones. So I'm just uh, what what is, I mean, it's talking about you personally, Sanjay. What is your success criteria for an exit other than the returns?
No, so idea is I have a patient capital in mind where I would like to stay long with the startup kind of stuff. But as I mentioned, everything needs to be having a process. So I use an 80-20. Okay, can you? There is an exit slide, Aditya. If you can just go down slide. So there are
Uh,
three types of exit.
Down.
Yeah. Okay. One more. Next. 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 Just go down. Scroll. The exits are at the last. Next. 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 Yeah, niche next. Yeah. So there are three types of exits, right? One is a financial exit, right, where VCs buy your stake. This is a, like the best possible exit for individual investors, right? And typically, easily you will make double-digit kind of returns, yeah, which can work across. Then you got strategic exit. This is where a corporate would buy across. Typically, it is like build versus buy, and whenever a strategic buyer does an acquisition, you get a good exit, but these are averages. And then acqui-hire, this is like when you salvage your capital. So this is more what do you say, returns driven kind of classification of how exits work. But if I have to take an exit process or decision making, it's 80-20. 80% of the time, whenever there is an offer, I will take an exit kind of stuff. Because this exit offers are very arbitrary in startups. It's an illiquid asset class. So 80% of the time, I would go out and take an exit whenever it comes along. 20% of the time, I would like to, I think you switched. Okay.
Yeah.
Uh,
Sorry.
20% of the time, I would, keep my stake and work across with the founder for a bigger or larger exit. At that, my exit trigger points would be, do I believe in that business? Second is, do I believe into the founder? Do I believe into the new investor which is coming in? Do I have a relationship with the founder which makes me comfortable or uncomfortable kind of stuff? So these are the trigger points which helps me take an exit.
Sure. You want me to read more questions? Hello.
I mean, we can close it if time.
Yeah, I mean, I think we're already almost out of
Yeah.
time.
Okay.
So Padmaja will be joining any moment. So thank you so much, Sanjay. I'm sure this presentation was quite long enough. I will be happy to share this with everyone and audience. Sanjay is very easily accessible on LinkedIn or other platforms. So please feel free to reach out. And Sanjay, all the best for the next cohort. I believe that's coming up very soon for 100x. Look
Thank you.
forward.
Thanks, Aditya.
Great.
Thank you.
Have a great day. Thank you.
Bye. Bye.
Audience, will be starting our next session, which that's the first showcase session on Indian Angel Network shortly. So please hang on. So, audience, I believe our next speaker, Padmaja, is facing some issue with the network where she's located currently. So, we'll try for a few more minutes. If she's not able to join in, we'll take a break and regroup at 11:30 for the next session on from Venture Catalyst.
Lavina, are you able to share screen?
No, I requested for screen sharing, right?
Yeah. Minute.
Hi, Aditya.
Hi.
Okay, yeah.
So yeah, three of you are we are live, and we'll be starting another 5 minutes max.
Is the screen visible?
Yes.
Yes, it is.
Let me know when do we have to start.
Yeah, another couple of minutes.
Do we have to take FAQ also?
Anuj, did you ask me anything?
Yeah, do we have to take any questions also?
Up to you. So we have 30 minutes.
Hmm.
And if you're done within time, then we can take some Q&A towards the end. So let's get started. Yeah, you ready? Anuj?
Yeah.
Yeah, super. So audience, I think we missed out on the first showcase session, which was scheduled by Padmaja Ruparel from Indian Angel Network. She's in a low network area and somehow she just couldn't connect. Hopefully we'll have that session sometime soon, if not a part of IPI after the IPI is over. So please join me in welcoming our next speaker for the day, Mr. Anuj Golecha. Anuj, other than being a good friend, is also a name which is rising very, very fast in the startup investment circles in the country. He's a CA by qualification and one of the very prolific angel investors through his platform, Venture Catalysts. I have seen personally the growth of Venture Catalysts over the last few years, and it's highly commendable the way they build themselves into. I mean, we all know there's an overglut of this in startups, networks, and accelerators, incubators, etc. But the way venture capitalists have built a nice, unique positioning for themselves over the last few years is really, really commendable. Anuj has been rated as one of the top 10 prolific angel investors in India by VC Circle. He's also a part of our 40 under 40 alternative investment community that we started in 2018. He was the winners in very first edition itself. He's also been invited for Champions of Change for Fixing Finance. That's a recognition by Honorable Prime Minister of India, and Swachhata Hi Seva, which is a recognition by Swachh Bharat Abhiyan. He's an investor in some of the large startup names like BharatPe, LaneDen, VPhrase, Fine, Innovate, Shiprocket, etc. The list just goes on and on. I think I'll let Anuj do more of talking. Anuj, thank you for joining in today for this session showcase session on Venture Catalyst. So quick background to you on this entire initiative. We thought with both investors getting very more and more experimental with new asset classes, and the distributors and wealth managers always looking out for the right legit opportunities for their clients. We thought there's a case for an annual platform that can showcase innovative and exciting products and strategies among different asset classes. So in this innovation week, innovation showcase initiative, we've divided this into 10 days. Each day, we are focusing on a separate asset class. We started on Monday with AIF and PMS. We've covered a few. Today is the 5th day, and we're talking about startup investments. And the audience which has joined in through a separate event platform is a mix of wealth and asset management professionals as well as investors. So the format here is we are inviting platforms like you or other product manufacturers to showcase, to talk about the platform and how they can work both for the distributors as well as the investors. So that's about it from my side. Over to you. Once you're done with your presentation, happy to facilitate Q&A for you.
Sure. Aditya, thank you. Good morning to everyone. And yes, like Aditya mentioned, I know him for what now, 4 or 5 years, and it's been a mutual journey where we've grown together. So without taking a lot of time, interestingly, a lot of investors have started looking to invest in startups as an asset class. More so, we've seen that journey grow since the COVID has started, and the participation of investors at all levels has gone up drastically. And we could see an impact of that in 2021 also, where India was kind of creating one unicorn startup every 7 or 8 days. While a lot of those things may rationalize in the times to come, but would just want to kind of give you a sense of what has been the startup ecosystem up till now, which has grown over the last 8 to 10 years, and then speak a little bit about Venture Catalyst. So here, if you see the slide, today we are slowly but surely becoming the 3rd largest startup ecosystem globally after US and China. And in a very short span of time, I must say, and we already are 100 plus unicorns. There are multiple companies which have potential to become a unicorn. And when I say and use the word unicorn, I'm sure you guys understand it is something which is where a company is valued more than $1 billion. In today's parlance, probably close to 8,000 crores INR in terms of market capitalization. And the investor community is slowly but gradually increasing. Today, we would be having active investors doing angel investments close to 6,000 people. While there are a lot of people who do 1 or 2 investments but are not generally active, we've kept them a little bit on the side. And if you see some more interesting data points on how the Indian diaspora is creating an impact globally, 1 out of every 10 unicorns which has been created is born in India. In fact, if I go a little bit further, all the larger tech companies which are there globally, we all know are being led by Indians today. In fact, most of the companies, the CTOs are Indians. So as Indians, we have a hand in a lot of tech companies which are growing in India as well as globally. More importantly, India today at an ecosystem is just about 75,000 registered startups which are recognized by DPIIT. And if we just grow the way we have grown in the last 7 years, this 75,000 odd startups would easily become a million startup economy in the next 5 to 7 years. And it is a function of a lot of infrastructure and fundamental changes which are happening in India, right from internet penetration, investor ecosystem growing, the demographic dividend playing in our favor, We also have a few things in terms of infrastructure changes which are happening rapidly in India, which is also improving, and geopolitical reasons, as we all know, where a lot of money, India is becoming a silver lining to attract that. So these are few things about the Indian startup economy, and I would just now like to take you to our journey of Venture Catalyst, who we are, what we have done up till now, and what we envisage doing in the times to come. To start with, just a little bit glimpse on the people behind Venture Catalyst. We This journey started somewhere in January 2016, where four of us came together. Dr. Apurva Ranjan Sharma, Apurva Bhai, has been in the India startup ecosystem for almost 20 years. I say that because he was one of the first to set up an incubator in India, and he got a President of India Award recognition in 2004. He's also done a PhD in incubation management. Very few people whom you would have heard to do that in India, and multiple companies which are incubated or where he had a role to play, and now sits on multiple government advisory bodies to kind of advise as far as DPIIT is concerned, SEBI is concerned, on various policy initiatives. We also have Gaurav Jain. He again comes from a professional background, IIT Roorkee engineer and Stanford MBA alumni. Between that, he was managing Mr. Mukesh Ambani's family office VC fund. And then he joined us to become a co-founder of Venture Catalyst. Anil ji, he is an entrepreneur. He's built multiple companies in his last 30 years of working history. Couple of those companies have also gone on to do an IPO, and comes with a lot of vision and entrepreneur experience within the four of us. And I am a chartered accountant, and Aditya has already given my background. So between the four of us, it was a perfect mix of professionalism, experience, capital, mentorship, and the network which we all of us bring together. Sorry. Today, 6.5 years, we now are present across multiple group entities. Our team size has expanded to close to 120 plus people managing this business. We are present in 50 plus cities in India and 5 international geographies under the Venture Catalyst brand. And there are multiple regional venture partners who come and partner with us to expand this product to their respective networks. And I'll speak about that more in detail in the coming slides. Yeah. Just to give a little bit on the numbers which we have been able to achieve in plus 6 years of our history, while today we are at a community of 11,000 plus investors actively engaged with us to invest in this asset class, we have clearly set our vision to expand this to 150,000 investors in the next 3 to 5 years to engage just with us only for startup asset class. We have already invested in 300 plus unique companies, all largely based in India. They may have their headquarters or holdcos externalized to a Singapore or US, but they are all Indian operators. And across these 300 plus portfolio companies, we've been able to generate in more than 93 companies multiplier exits, liquidity events, and uprounds for our portfolio for our investors. On the other side, out of these 300 plus unique companies, we have a mortality ratio of less than 10%. We are generally early to growth stage investors, and to see that that kind of mortality is unheard of in this asset class. Across the business, we hold today 6 regulatory licenses in India as well as globally, in Mauritius as well as Singapore and GIFT City now. And our overall assets under management are close to $600 million, which we have been able to create in the last 6 odd years. Because of the scale at which we have started operating and the numbers which we are doing, since 2017, we've been recognized as one of the most active investors in India. 2018 recognized top 3 in Asia, and since 2019 we have been recognized to be amongst the top 10 global players and the only Indian entity to appear in that list. Whatever we have done is in just last 6.5 years journey. A lot of other players have done that in 15 to 20 years of their operations. Yeah. Some of the investors who have participated with us, either from India or globally, we have a lot of institutional investors, banks, listed companies who have invested either in our funds or in our startups directly. We have a lot of global companies who have also likewise invested in our funds or in startups directly. And most importantly, as you can see, stalwarts like Mr. Radhakishan Damani, Mr. Nimesh Bhai of Inam Holdings, Mr. Kamal Agarwal of Haldiram Group, and a lot of startup founders also have in the journey come on board as shareholders of our parent company from time to time. Yeah. So the journey started in January 2016, and our focus from day one was to expand to places where this asset class is not present. So after Mumbai, our first expansion was to a city like Surat to build the investor community and to invest in companies coming from there. And today, as we speak, from being present in one city in Mumbai to 50 plus cities, we are very, very deep rooted in places like Dehradun, Guwahati, Ranchi, Kolhapur, Bhavnagar, Indore, Coimbatore, Jaipur. And these are all places where we have our investor community being present. And also, we have invested in a lot of startups which have come from these regions. So, 40% of our portfolio, in fact, is coming from places like tier 2, tier 3 cities. And that's the uniqueness for which Venture Catalyst is known for. Over the years, we expanded to international geographies like UAE, UK, US, Singapore, all these places we have set up our offices with our own licenses to bring money into India. We are only India based operators investing in only such startups. Yes, Davina, we can just move forward. So just to give a glimpse of the overall ecosystem which we as Venture Catalyst have created, there are multiple products which we have. And we always thought that how do we make the capital which we invest to be smarter capital, and therefore we decided that first we need to give visibility to our startups that if we back them, we are going to back them for the next 36 months, probably through different products. So 9 unicorns, Venture Catalyst Angel Fund, Beams FinTech Fund, and Elevate are 4 different licenses which we have from SEBI to invest at different stages in the life cycle of a startup. 9 unicorns is something where we invest at an absolute idea stage. Typically, when the founder starts, he raises, he puts his own capital and takes some money from his family, and then he goes out to raise money from his friends, network, mentors, advisors. That's where 9 unicorns as a category 1 SEBI registered AIF comes into play, tries to become the first external shareholder of the company in the first 6 to 9 months of their journey, and also do hand holding and support. This fund, we already have raised close to 800 crores plus and is targeted to close at 1,000 crore corpus. And through this fund, we have invested in close to 120 unique companies as we speak in the last 18 months of our journey. The Venture Catalyst Angel Fund is an ongoing platform. It's a syndication platform where we give deal by deal access to our investors to invest in curated companies. Today, as we speak, simultaneously, we have our pitch day going where close to 2,000 plus investors are participating and looking at 9 curated companies which we have opened for this month. And from this platform, we put money anywhere from 3 crores to 15 crores in a single startup. Like this, we are deploying close to 10 companies a month. on an average 75 crores as equity capital being deployed through the syndication platform. Beams Beams comes in the stage like Elevate, where we are entering companies at a Series B, Series C stage. Our ticket size from the fund is anywhere from 50. Beams is a purely fintech focused fund, and Elevate is a sector agnostic fund at this stage. So as you can see, we have created a complete integrated ecosystem to back companies right from idea stage to their next 36 months journey up till a Series B, C through different products. And all this comes under the Venture Catalyst umbrella. Yeah. And some notable exits which we have been able to generate in the hands of our investors, right from a company like BharatPe, where we have given 190 times of capital the investor has put in a startup in their hands. And these are actual liquidity events and exits which have happened. And there are multiple such companies which we have invested. So Venture Catalyst is actually the syndication platform with which we started in Jan 2016. And in this, we must have evaluated close to 20,000 plus companies and eventually invested through this in just 200 plus companies. And as I mentioned earlier, we've already been ranking amongst the top 10 global players in the early stage investment geography. So this becomes like our first product which we launched in January 2016. Then we move on to Nine Unicorns as our second product. Yeah. Nine Unicorns, as I mentioned, is a 1,000 crore corpus targeted fund. We took the license from SEBI in 2020. Around April, May 2020 is when we started raising capital and we did our first close. This is a closed ended fund for a 5-year period. And like any other AIF, it has a minimum ticket size of 1 crore, which an investor has to put money into. And we already have couple of companies which are unicorns, which have been invested from this fund, and multiple banks, institutions, and family offices have already put money. This team is close to 18 people independently managing Nine Unicorns idea stage fund investing. Yeah, this fund we intend to close by December 2022. And then in the next 4 years, we would be giving the capital back in the hands of investors. Beams FinTech Fund, the license we took in 2021, December 2021. And between December to up till now, we have already raised close to 450 crores in the fund. A lot of banks and institutions like SIDBI have all again committed to this fund. More importantly, we brought money from people who come from this space, people like Capri Global, people like Brescon, people like Yes Bank, who are also helping portfolio companies. We already have made 2 investments from this fund, Neo, which is a digital bank. We invested somewhere in February 2022. The company has already done one more round of investment after we invested from Multiplier fund run by Renuka. And so we are on a markup on that investment. And our second investment is ProcCap. Both these transactions, they raised close to $100 million each, close to 700, 800 in the round. And we participated with a check size of anywhere between 50 to 75 crores in that round, respectively. This fund is purely focusing on investments in fintech in the India startup ecosystem. We will construct 10 to 12 companies in this portfolio, and it's a 7-year fund cycle period which gets over by 2029. Sagar Agarwal is the managing partner for this fund, who co-founded this along with us, and he comes from 15 years experience of investing in fintech and financial services investments in India and growth to PE stage. Yeah. This is a new initiative which is being launched It's called Elevate. This fund again is a sector agnostic Series BC fund. While we are targeting 1500 crore plus as a corpus in this, very happy to share that we already have one very large anchor commitment in this fund, which has already taken up 1/3 of the capital what we want to raise. This is from KB Financial Group. It's a South Korea based bank. They manage $450 billion worth of assets across banking, insurance, and wealth. And they have come on board to anchor this fund along with a few other family offices. So out of $150 million, already $70+ million has been committed as we speak. And this fund will be led by Mr. Naveen Honagudi. He comes from 15 years of experience with Reliance Capital and K Capital of investing in the startup ecosystem. He, over the last 15 years, he's deployed more than $200 million plus, which is close to 1,500 crores in today's parlance, in startup ecosystem, and multiple companies which have become large and grown. So one of the very early investors in the India startup ecosystem. He's come on board as a co-founder and partner of Elevate. Yeah. And within the venture catalyst umbrella, we have also done some strategic investments, companies like Incubate Hub, Alma Connect, and Coffee Mug, where we have invested from our parent company to expand our network and to extend support to some of our companies. So companies like Alma Connect and Coffee Mug, they bring a community of close to 15 lakh people between CXOs, business angels, entrepreneurs to our platform. And that gives us a great funnel for curating deal flow, for bringing CXO support, for bringing investors in our community. And Incubate Hub as a company has been operating for 5 years based out of Bangalore. They provide support to startups by getting business from corporates. Their core business is just doing that. And as venture catalysts, we hold stakes from anywhere from 12% to 60% across these companies to empower the community. Yeah. So just a single slide of what I already spoke about, where we are supporting startups at different journey through different products. And we have created different enablers to support our portfolio, like a demo day or a corporate day. Demo days where for our portfolio companies, we invite a lot of institutional investors to look at our portfolio companies. Seed Day is something where we invite a lot of corporates to engage with our portfolio companies to give them business. Pitch Days is where our curated companies are showcased to retail and angel investors. So a lot of these initiatives are happening as we speak and will be ongoing. Very happy to engage with you guys one-on-one if you want to understand anything more in detail or in an offline manner. But I just have a couple of more slides before I complete. Yeah, Lavina. So how does someone engage with us, either as an investor or a partner or to support any of our companies? And we have different advantages and products around that. And I would like to invite all of you to look at this. So while we have our advantages of access to very high quality deal flow, we also are able to give ability to investors to invest anywhere from as small as a 2 lakh rupees in a company to being an investor in any of our funds, where the ticket size is minimum 1 crore. And we support our portfolio in different ways. As wealth managers, the opportunity with all of you is to become a partner of Venture Catalyst, to be able to distribute our products, or in some manner to bring startups which you guys are looking at and are interesting enough, where we could raise capital for those startups or support any of the companies where you are already participating in. Yeah. So while up till now, whatever I spoke about was only about the commercial impact which we as VCATs are creating on the India ecosystem. There are a lot of numbers which we are also measuring, which are more on the social impact side. and I would like to speak on some of those things. It speaks about the number of entrepreneurs and micro entrepreneurs which we have created through the investments which we have made. More than 35,000 plus micro entrepreneurs, and their lives have been impacted. Today, there are lakhs of underserved and underprivileged people whose lives have been impacted because of the products in which we have invested. More than 30 lakh plus women who have got products whose lives have been positively impacted because of various investments which we have done. And more importantly, there are 3,000 plus jobs which have been directly created by our portfolio companies over the years. And these are numbers which we keep on tracking year on year, and we have our vision set to touch million plus lives in our social impact journey. Largely, that's it from my side. Thank you from the founders of Venture Catalyst Group to have this patient hearing. Aditya, I'm not sure if there is time for Q&A or anyone wants to ask anything, but you can share our coordinates if anyone wants to engage with us offline.
Yeah, sure, Anuj. We have just about a minute, but let me quickly try to take a couple of questions. Shashank is already here, our next speaker. Shashank, you'll have to give us a few minutes. So, audience, if you have any questions, quickly please share on through the ask a question button. Okay, Anuj, there is one question I can already see. In your investments, how do you gauge the regulatory risk that the startup or the particular industry faces? Like you mentioned a lot about, I mean, it is clearly seen from your funds and other investments that you made that you're quite bullish on fintech. And fintech has been lately facing a lot of heat from RBI. So how do you do your due diligence on in terms of the regulatory risk that can come up?
Yeah, so specifically, if we speak about fintech, one of the things which we have within our ecosystem is both I and our fintech partner Naveen Surya, we sit on various regulatory bodies, both SEBI as well as RBI, and we are able to get a sense and pulse from them where the direction is going. That gives us an insight on the companies which we want to enter into, or if there are already companies which are getting impacted, what is the direction one should take. So interestingly, a lot of companies where we've invested, we were able to give that kind of insight in advance, and we were able to maneuver that. But as we speak, when it comes to innovation, yes, there are regulatory risks which are already always going to be there, but that necessarily does not stop us from investing. If it's a good opportunity and it is a problem which is being solved, we also take the onus on us to go to the regulators to speak on behalf of the industry and to try to make some policy changes or advocacy on some policy changes.
Sure. One sec. I'll quickly. I'll just take this as one last question, audience. So if you have anything, okay. Is not. How do you ensure that investments through your platform are safe? Is there any pre-exit options available? I'm not sure what does this mean.
Yeah. If you want me to take that question,
please do that.
Fundamentally, we are all evaluating close to 700 to 1,000 startups every month, out of which we create a funnel of 10 to 12 curated opportunities. So there is a lot of due diligence, financial, legal, technical, and personal due diligence which goes before we decide to make an investment. There's a lot of ref check and other things which go on, which gives us comfort way before we decide on investing in a founder. That is a key thing, and all our capital which goes in the form of equity only. We don't do any debt investments, so it's largely risk capital which we are putting. And there is a mechanism where our platform also helps in doing post investment monitoring, management, and there are regular exit offers which we enable or the founder brings. And that entire process is also managed in house by our team. We have a portfolio development team which does this. So fundamentally, pre investment and post investment, there is an onus which Venture Catalyst as a platform will take on all the investments.
Sure. So Anuj, I think I'm afraid we'll have to stop it here.
I understand.
Because we've shot the timing and have a next session waiting. So, but thank you so much for joining in on a Saturday morning for enlightening our audience with this. I'm sure a lot of these people would be interested in connecting with Venture Catalyst, either as investors or distributors. And I wish them and I wish you all the best with your platform and your funds. Thank you so much. Look forward to keep engaging with Venture.
Thank you.
Yeah.
Thank you.
Have a good day. Bye.
Bye.
Shashank, you already there, it seems. I'll quickly make you the co-host. 1 minute. Yeah, you're the co-host now, Shashank. You have any presentation to share? Please do.
Yes, thanks, Aditya. Thanks for giving us the.
No, 1 sec. Let me introduce you formally. I was just checking if you were able to share the.
Yes, I can. I can.
Okay, so without wasting any further time, audience, let's quickly jump into our next and last session for the day. This is a showcase by 100x. We all have already heard Sanjay in the morning. He was talking more on his strategies of picking winners. We have his partner Shashank here, who's going to basically talk more on 100x VC and their objective behind setting it up and how they're going about things. So quickly introducing Shashank to you all. Shashank Randev is a founder VC at 100x VC. He is an entrepreneur who's scaled up a lot of startups in the past. He's a founder, VC, and co-founder, I've already told you, and has invested in more than 100 innovative and disruptive startups since the launch of 100x VC in July 2019. He was previously the founding member and vice president of VC Edge, the data platform by VC Circle. He led revenue, product development, and growth initiatives for close to 7 years at VC Edge. VC Circle was acquired by News Corporation in 2015, where he served as business head for the division until 2016. He's also worked with NIIT Limited and Zensar Technologies Limited before that. Shashank is an angel investor and advisor with a keen interest and portfolio in B2B emerging technology, deep tech, SaaS, clean tech, and Web3 startups. He holds an undergraduate degree in Bachelor of Engineering from Nagpur University and an MBA from International Management Institute, New Delhi. So, Shashank, thank you so much for joining in. There's more to your profile, but I will rather do your platform, do the talking, because there's so much that you guys have achieved in such a short time. And kudos to you and all the rest of the founding team members at 100x VC for creating a new blue ocean, in startup investing. So can't wait to hear from you. To inform you about the structure here, the speakers have joined in through Zoom. The audience has joined us through a separate event platform. I'm here to play the role of the moderator and intermediary. So we have around 30 minutes for this session. If we have some time towards the end, I'll be happy to moderate the Q&A with the audience for you. Sure. Yeah. So over to you. Yeah.
Thank you so much, Aditya. Delighted to be here. And before I begin, just wanted to check: are you able to see the presentation screen?
Yes, very much. Yes.
Okay, so you are able to see 100x value adding investing, right?
Yeah.
Okay, great. So thank you all for taking out the time. My name is Shashank Randev. I'm the founder VC and co-founder at 100x.VC, and I'm delighted to be here. We are an early stage fund. We started our journey in June of 2019, where the objective was to be the first check into early stage companies and become the de facto discovery fund for any type of investor, whether it's venture catalyst, angel networks being led by Anuj and team, to growth stage VC funds like Sequoia, Chirate, or HNIs, angels, or angel networks. Any of type of investor should be able to identify opportunities from 100x.vc. And our mission is we want to fund exceptional Indian founders, and we've been working very, very closely with the early stage ecosystem, which is a function of not only incubation centers, accelerators, but also state and central government bodies which are working with startups, all the way to community leaders who have been working very closely with startups, whether it's the TIEs of the world or the Head Starts. Our thesis is very simple. As I said, we want to be the first check into the portfolio companies we back. And we are looking essentially at the founding team as the topmost priority, followed by market size opportunity, which we personally believe is ever so growing in India, followed by business model strength, an unfair advantage or moat, and our ability to deliver at least a 20x return on our investments. We have a very standardized model because, as I mentioned, we are a discovery fund, and the objective is to standardize the first fundraising check. So we started a journey with investing 25 lakhs per company. We have now, in 2022, increased the check size to 1.25 crores per company. We are a SEBI-registered Category 1 alternative investment fund. And our portfolio companies, can be viewed on our website. And we are attempting to build the new India with backing entrepreneurs between the age group of 18 all the way to 50. Some of these stats over the last few years, 3 years, we have invested in 102 plus companies right now. And we invest in sets or cohorts, or as we call them, class 01 to class 07. What it means is that we identify a set of companies and then we deploy capital at one go to the founders. So class 01 was a set of 20, followed by class 09, which is a set of 9, then 10, 11, 10, 10, so on and so forth. And therefore, from class 01 to class 07, we've invested in 80 companies. We are now in the midst of class 08, where we've backed 22 odd companies, and we're trying to cross the barrier of 2022, and hopefully we should be investing in another set of 5-6 companies, and hence therefore we are cross the barrier of 100 companies total cumulative portfolio size. But we'll announce the new set of companies in the coming months. But for the 80 companies, we've cumulatively raised 65 million odd USD as follow-on investments right after our investment check size. And this comprises of, and the percentages might vary, but roughly around 72 to 75% from growth stage VC funds, angel networks and family offices, and the balance 25-28% from HNIs and angels directly investing into our company. So we backed over 200 plus founders, and approximately 900 plus jobs have been created within these organizations. One point to the previous slide is, out of the 80 companies we've funded and they've raised 65 million cumulatively as next follow-on funding, out of those companies, 8 to 9 now have gone to a Series A, which is a function of a 5 million to a 25 million check size fundraise. So clearly some of these companies are growing and growing fast and able to cross the barrier of Series A and move on and then become more relevant for growth stage VC funds. Now, the question over here is, how is this different from all the other companies which are out there, or early stage funds which are identifying opportunities? So what makes 100x VC different from the plethora of early stage VCs is that we have access to top tier deal flow. Now, we've evaluated roughly around 25,000 companies over the last 3 years, out of which we've invested in 100 odd companies. Now, we invest as the first check, as I mentioned, on a cohort-based model, between 10 to 20 companies. And this time around, we're trying to cross that barrier of 20 companies. And with this massive deal, 100x ends up attracting a large set of entrepreneurs with an unfair advantage to choose the best startups. And I think that any VC fund or investor which sees a narrow pool of deals misses out on big opportunities. And that's the opportunity gap. That's the space which we want to address as 100x.vc at the bottom of the pyramid by selecting fundamental deals. Now, entrepreneurs are seeking 100x as a brand on their cap table because today 100x has become a social proof that the idea is venture fundable. We discover and we have unparalleled access to these proprietary winning deals very early because of our active engagement with startup communities, as I mentioned earlier. We have somewhat proven, the value add which we are bringing, and I think that's warranted by 100 companies wanting to take our capital, because at the early stage, what happens is capital is not the only thing you require. You require a lot more in terms of market access, so on and so forth. So, in the true sense, we intend to become, and we do become their lead investor, their marketeer, act like an investment banker, but with no fee or commercial, but actually providing them seed capital and helping them build the next funding round. Now, in terms of our capabilities, experience and exposure of the 100x team comes from various fold. 4 things that matter for any early stage company to have a succeeding path is access to network, their preparedness, their activity, and the fund or the investor's reputation to open doors. And we believe that startup investing should not be looked at as an experiment. We work on each deal meticulously. We use our experience of deal evaluation with pattern matching lens to scan startups that are likely to scale and be an outlier hit. And that's the core objective over here. Now, 100x brand outreach is something which kind of helps these companies amplify their reach and reach out to relevant folks, not only in terms of investors, but larger GTM opportunities, domestic and international. So founders know us, they've heard about 100x in their college incubators, startup conferences, or as I said, social media. If they've not heard of us, we have enough social proof from our existing portfolio companies of 100 plus to win them over. We have multiple non-for-profit initiatives, which we realized when we started investing that when you're working at the bottom of the pyramid, you still need to do nurturing of the ground so that you are able to discover more fundable opportunities. And for that, we've introduced non-for-profit initiatives like 100x Gurukul and Founders Dating to provide key insights to first-time entrepreneurs. And I'll talk a little more about 100x Gurukul in my coming slides. So we are, so to speak, out there engaging very, very actively with entrepreneurs who are just dreaming of starting their businesses. And that leads to credible deal flow. The goal at our fund is to create a process around this to provide all investors with the information needed to make an informed decision about investing in a 100x validated company. And the general process will be for a deal to move through 6 stages of funnel, at the conclusion of which the startup will have capital commitment from 100x, and then subsequently from investors who are interested in the deal showcased at the VC pitch day, which is the day when we announce companies to the world. At this point in time, I'd like to take you through a bunch, at least 5 case studies, and I can't cover all, but some of the examples, some of the stars which have risen out of our early identification process. So let me begin by talking about Smiles.ai. And Smiles.ai is a dental derma care startup that leverages on technology to connect customers to dentists and clinics. Now, 100x invested in Smiles.ai pre-COVID in November 19, and they were aiming to become the OYO for dental care. Now, they were at a monthly revenue of rupees 17 lakhs with operations in only 2 cities. Today, Smiles.ai is doing monthly revenue of greater than 4 crores. They've served roughly 3.5 thousand plus patients. Month-on-month growth is 20%. And now they're operational in 8 cities with 150 plus operational clinics. They've recently raised a 23 million round in Series A funding from AlphaWave, Sequoia Capital, and Chirate Ventures. Similarly, we've got Pocketly, which is a very exciting proposition. When we were initially just excited by the founder's zeal. It's a micro lending platform that focuses on college students and building a financial ecosystem around them. Now, 100x invested in Pocketly pre-COVID when it was only 20 days old, but with 1,000 downloads in just 2 days in November of 2019. Just like the rest of the lending sector, Pocketly was impacted by COVID-19 due to their small ticket size and their strong community. The impact was marginal. Today, Pocketly is doing 315 crore of annualized lending, rupees 30 crore of annualized revenue, and rupees 10 crore of annualized profit. 8 lakh plus downloads, net NPA 2.7%, which is exceptional, grown to a 30 plus member team, and they've recently raised 1 million in equity and 2 million in debt early this year, led by Dholakia Ventures. My third case study would be around Datasutram. Fantastic founders, 3 co-founders who were recently selected at the 30 under 30. And these founders have had an exceptional journey. It's an AI-backed platform that gathers intel from external data to provide location-based data intelligence. The founders were 3 friends who skipped college placements to start this company. And 100x invested in Datasutram in November of 2019 as part of our Class 01, right after the founders had graduated. They have strategically taken advantage of the COVID situation by helping businesses optimize their resources and reach target customers. Today, Datasutram has quarterly revenue of 90 plus lakhs, large BFSI customers such as Paytm, Rupify, Hitachi, Pine Labs. They've grown their 11-member small team from Kolkata to a 50 plus team in Mumbai. They've also recently raised their Series A of 2.07 million from Varanium Capital, Yatra Angel Network, and IIFL, and others. A spectacular journey for these kids. Case study 4 is on Vitra.ai, and this is a personal favorite company of mine because I really loved what they were building when I saw them for the first time. Very grounded founders, very technically able founders. And what Vitra.ai does is translates videos to 75 plus languages using their artificial intelligence platform with just one click. Satvik and Akash, batchmates since way before college also, had been working on the idea for countless days and developing a remarkable product when they approached us for funding in October of 2020 and became part of a Class 03. Now, their unique offering for the global markets made us optimistic that their pioneering efforts in the AI space will scale rapidly. Today, Vitra.ai has monthly revenue of rupees 15 lakhs, working with several enterprises like HDFC, Reliance, Jio, Bajaj Finance, TCS, and others. Team size now is 40 plus members, and they've raised $500,000 from Inflexer Ventures, and right now in discussions to raise their Series A, which would be roughly around 3 million to 4.5 million USD. And my last case study is Kerala Banana Chips, and I wanted to bring this portfolio company out because, as you might have sensed, and as typically VCs do, they end up investing in technology-based startups or the future. But the future cannot only be defined by technology. The future is also about what customers want in terms of tangible D2C products as well, right? And therein lies Beyond Snack Kerala Banana Chips, which is the tastiest banana chips as the founder claims, and it is genuinely the tastiest for me as well. They bring banana chips in a standardized branded format in multiple flavors. 100x invested in them in December of 2020 when they were still at a monthly sales of rupees 3 lakhs. Their wish was to put a packet of banana chips besides a packet of potato chips in every retail store in India, and then followed by the world. Today, Kerala Banana Chips is at a rupees 1.9 crore of monthly sales. It is available in 4,300 plus retail outlets with 17 plus distributors in Mumbai. pan-India online presence on all e-com platforms, including Amazon, Flipkart, Zepto, so on and so forth. They're also exporting to US, Mauritius, Australia, Dubai, Kuwait, so on and so forth. They have raised $500,000 from multiple angel investors, including Ashnir Grover and Aman Gupta from Shark Tank. They were recently on Shark Tank, and I loved his presentation. And I think this is a great example of the diversity of the founders and the sectors which 100x backs while investing in companies. So we are very, very sector agnostic. All our investments are done through iSafe, which is India's simple agreement for future equity. This is an instrument which we introduced in India under the legal ambit for the first time in 2019. And this is an instrument which enables quicker transaction, quicker closure. And we only invest through this instrument in all our companies. We do not do a shareholders round or an SHA round because many of these companies cannot be valued, but need to be backed for their dream, their product, which is at a minimal viable product stage and is promising. And that therein lies the ability to identify opportunities and then give them wings by providing them capital first and valuing them possibly at the next round. And that's why we invest in companies only through iSafe. It's also a very easy instrument for investors to come in and invest, right? Because we have certain steps. One is code of promise, which is essentially a trust treaty between the startup founders and investors for a quick closure. You can read more about it on our website. And also, we provide deal access, which gives verified investors a chance to invest in 100x seed funded startups. And these are all high growth, credible deals across diverse sectors, as I mentioned. And the beauty of engaging with 100x companies is that we are not an angel network. As I mentioned, we are a SEBI registered category 1 fund, but our role is very clear. We are at the bottom of the pyramid, and hence we want our companies to be backed by all type of investors, as I started my presentation with. I mentioned 75% of capital in follow-on funding has been raised by founders through venture capital funds, and balance has come in through angel investors and angel networks. And hence, a lot of HNIs and angels also choose to back our portfolio companies because there is no membership, there is no transaction fees to invest into 100x portfolio companies. Investors fund startups directly without any intermediary. And in order to understand more about the iSafe, feel free to go to our website and read through the iSafe document. We've been backed, as I mentioned, by multiple follow-on growth stage VC funds and angel networks from Chirate, Titan Capital, Sequoia, Point One, Lightspeed, so on and so forth. And we're continuously seeing our portfolio companies getting more and more relevant for these late-stage investors, and therefore achieving or building on a goal of becoming the de facto discovery fund. As I mentioned, during this process, we also realized that there's a lot of non-for-profit, non-equity, non-fee-based initiatives which 100x needs to do to kind of nurture the early stage ecosystem. And hence we started 100x Gurukul, which essentially is a 12 weeks online course of live and recorded video content around multiple topics, whether it's GTM, sales to enterprises, how to build out your products, so on and so forth, by 100x team and also industry experts from various sectors. Which gives insights to these first-time entrepreneurs across incubation centers and accelerators to kind of, figure out their roadmap before they reach out to an investor. And this is completely non-for-profit. And we were recently covered by Forbes India, which actually mapped out our journey over the last 3 years and basically taking companies from 0 to 1 and beyond. The whole objective at 100x is that can we provide capital and network which will help these founders build out scalable businesses. As they say, fortune favors the bold. Startup investors are luck makers, in so many words. So being in the right place, meeting the right person, making a small decision that in retrospect turns out to be a huge one is of essence. No one gets rich and no one has gotten rich by renting out their time. So the only way to create wealth is to own equity in an exponentially growing business, invest small capital into credible startup deals. And we've seen that angel investors have learned how to minimize the risk and generate 100x luck. And they've been doing this by making a series of small calculated investment bets after evaluating to test their assumptions and find new opportunities. And the risk is straightforward. You very well could lose all your money, but you could possibly make a lot of money and have fun while doing it. So investing in a startup is delicate, it's unpredictable, but there's a balancing act to it. All that an investor needs is that one point where everything holds just long enough to push the startup deal to the next fundraising level. And with that, I come to an end of my presentation. I'll be happy to take on questions. Feel free to reach out to me at shashank@100x.vc. These are my social media handles, LinkedIn and Instagram. So great. Thank you so much for taking out the time. And Aditya, thank you for inviting us. And I'm open to questions now.
Thank you. Thank you so much, Shashank. So audience, we have a few minutes. If you have any questions, please quickly put it up. So this is a question for both you and Sanjay. Shashank, you can hear. Yeah. So I am not sure what the full form means, but is there an EIR program as a fractional manager in 100x?
It's a good question. We do not have an entrepreneur in residence program yet. We are, the only program we have right now is an internship program, which is in its 6th cohort or batch. We essentially shortlist, 4 to 5 interns who work with us for 6 to 8 months, go through the entire process of deal origination to funding the company. And then also we've got expert mentors who advise our portfolio companies, but we don't have an EIR program yet, but maybe in the future, we might just, because we are growing and the portfolio size is growing. So maybe in the future, but not yet.
Okay, I have another question. How soon would Web3 become a mass adoption? Is there enough bandwidth available currently for it to expand exponentially?
So I think the jury is still out on Web3, right? And I think one of the core objectives of being a VC is to kind of identify or at least back trends or spaces which might evolve into greater, big, large opportunities which are catering to large consumption markets over the next 10-15 years, right? And within that thesis, Web3 definitely is of importance right now. And my personal take on that is that, while there'll be certain teething issues in terms of, how it moves from one phase to another, I think the same example goes for SaaS. When they started out, SaaS companies started out 10 to 15 years ago. They just got accelerated, in COVID and got amplified. But a lot of companies were backed very early on, 10 years at least ago, when it came to backing SaaS companies. Even from a Web3 perspective, many larger funds, global funds have been backing companies in blockchain. And I'm using Web3 Meta, everything clubbed together, because that's the whole ecosystem is moving towards that. But yes, we are very, very gung-ho. We've already backed 4 Web3 companies right now in Class 08, and all folks will get to know about them very soon. But we are personally very excited about Web3, and while there will be some challenges in depending on the vertical aspects in terms of them identifying or figuring out their product market fit, but the space is definitely here to stay. We are going to see a lot of automation vertically and horizontally happening, and Web3 is definitely going to evolve into more stable, more meaningful based opportunities which are being built by founders.
Great. Shashank, I'm afraid we'll have to conclude the session here. We are out of time. We'll have to move to the different segment now.
Sure.
So I thank you so much for joining in, and your first time with us, and I look forward to have you sometime for our in-person sessions also. But it's very, very interesting to know the kind of work. I mean, Sanjay was with us in the morning, and Of course, you're talking more specifically on 100x VC. So it's beautiful to see in this cluttered world of startup investments, 100x has created a blue ocean and is leading the way. So congratulations to all of you and all the best for your future cohorts and your founders. So audience, I think on that note, we'll conclude the startup segment. And for those who are interested in knowing more about 100x, I'm sure they can reach out to Shashank through social media or their contact details shared already.
Thanks,
Yeah,
Aditya. Thank you for having me. An absolute pleasure, and looking forward to meeting you soon.
Thank
Take
you
care.
so much.
Bye.
All the best and take care, guys. Have a great weekend. Thank you. Bye.